Welcome Bitcoin friends, it's Bitcoin Mamo. Today we're going to do a Bitcoin price prediction. We're going to look at what price level Bitcoin may peak out at during this cycle and also on what day. So if that sounds interesting, stay tuned. I hope you enjoy. This is the Brave New Coin Liquid Index for Bitcoin, and it has the longest history going back all the way to 2010. And what I've done here is, some of you might have heard of this. I know BitBoy has talked about this on his channel, but I wanted to plot it out myself and just look at the numbers also. So basically what we've got here is these green lines, they're the peaks of each cycle. We have one there, one there, one there, and we're heading towards our next peak. And these white lines are the halfening dates. And we can see the one 2012, 2016, 2020. And these red lines here are the lows of the bull market. And we can see we have 3 of those so far. And what I've done is I've measured the length here from the low to the peak. And this is the number of days that we took. So we took 740 days in that first cycle, 1068 in the second cycle, and 1011 in the third cycle. And what we've got here is we've divided this into two using the halfening date as this white line. And so just going from the low of the bear market to the halving, and then the halving to the peak. And we've done that for all 3 cycles. So what we can see here during this first cycle is it took 375 days. I know these numbers don't match up, but that's because I'm on the weekly chart. If we go to the daily, they do actually match up. It's just rounding it up because it's on the weekly chart. From the low to the halfening date, we see it took 375 days, and from the halfening to the peak of the first cycle took 367 days. And basically these percentages here are just this length of time here divided by the total amount of time from the bottom to the top. So basically 375 days out of 742 days is 50.54% of that time. And the same thing here, 367 divided by 742 is 49.46% of the time. And obviously these together add up to 100%. And on the second cycle, we can see it took a bit longer here. It took 542 days and 526 days. And although it did take longer here, if we do a percentage here of the amount of time over this whole length of time from the bottom to the top, we can see that we get similar numbers here. We get 50.75% from the low to the halfening date and 49.25% from the halfening date to the peak. We see how similar these numbers are. This is only off 0.2%. So what we've done is projected that onto the current cycle here, and we do have the low here in 2018 up to the halfening date, and we do have those numbers. It's 512 days. So how do we get these other numbers here? Well, basically what I've done is we looked at these percentages here. We had 50.54% and 50.75% for these red sections, and we just took the middle number basically, so 50.65%. And then from there what we basically do is if we do 512 days divide by 0.5065, then that gives us the total number of days of this length here, this white square, and that gives us 1011 days from the low to the high that we're expecting. Once we know this total number of days, then we know this percentage here is just 100% minus the 50.65%, and that gives us 49.35%. And then we can just take 49.35% of this total length, 1011 days, and what we get is 499 days. So by doing this projection, we can see that that would take us to the peak of this bull run on the 20th of September here of this year. And I think this is a good way to project the actual date because we do have very similar numbers from the previous 2 cycles. And again, credit goes to BitBoy. I did hear about this from him first, but I do believe someone else did publish this on TradingView before him. and I'm not exactly sure who that was. I wasn't able to find that. I do think that's pretty interesting. We've sort of got this pivot on the halving date with around 50% on either side, capturing the low and the high of the bull market. So what price can we expect to get to on this date? I'll go to the next chart for that one. So what I've got here is, first I've plotted this date here, 20th of September of this year. And what I've actually done, I'll just zoom into this first cycle here. So basically this is on a logarithmic chart, and what I've also done is used this fib extension tool, but on a logarithmic setting. So if I just open that up, you can see down here that you can do fib levels based on log scale. So I've just turned that on, and we are also using the log scale on the price action. So then what I've done is I've just done a retracement from the peak of this first bull run in 2011 down to the low, which was a $32 down to a $1.90 drop. And then we've just plotted these fib extensions here. So you can see how we have the 1.272 level, the 1.618, the 2 level, the 2.272 level, and the 2.414 level. And these are all presets in this indicator that you can just tick on here. So what we find on this first cycle here is we ran up, had this pullback, and then we ended up peaking out right at this around $1,200 mark. And this is basically at the 2.272 level, in between the 2.414 and the 2.272. But we can see we didn't have a body of the candle above the 2.272 level. And then of course we had this drop down, we had a bear market. So I've just done the same thing again here. You can see from the peak to the low here, and it's a fib retracement here. You can see 1 to 0, and we've just done the extensions, and we can set the same extension values here up to 2.414. And if we look at where we did peak out during this next cycle in 2017 at that 20,000 level, can see that we exactly peaked out or slightly above the 2.414 level. So quite similar here. This one was the 2.272, this was the 2.414. And then again, what I've done is the same thing. I've done the fib extension tool here, going from the peak to the trough with the same extension values. If we are expecting a similar rise here, going to the 2.272 level to the 2.414 level, well, the 2.272 level is at 204,773, and the 2.414 level is at 265,631. And by plotting this date here, the 20th of September of this year, and also by drawing a trend line here from the previous two peaks, we can see that they line up quite nicely here, right at the 2.414 level on that date. And again, that's around the $268,000 level. So there is some confluence there between both of those analysis, and obviously it's hard to predict these things exactly, but I like the way that both of these sort of lined up. And it wasn't planned that way. I just found the date and then I drew this trend line, and it happened to line up with this 2.414 level. And again, that would be very similar to this cycle where we came to the 2.414 level also. Another interesting thing to note is you can see we had been having trouble here for a while at this level, and we had spent several weeks here getting resistance. Currently we are slightly above it after this recent pump, but this level is the 1.618 level, and that's a very important level, and I do think that's part of the reason why we did have the resistance here. Looking back on the previous cycle, we can see when we got to this level we did go above, but then we did have a pullback, so we did have some trouble at that level previously. And if we look back at the previous cycle, we can see we went slightly above that 1.618 level, and then we had this really big drop here. And so we had a lot of trouble getting past this level, and it did actually take 6 months to get above that level. And when we did, we took off quite sharply to the 2 level and then the 2.272 level. And we can see on this cycle here, once we did get above, we did sort of take off sharply as well. We just pullback here, went to the 2 level and then peaked out at the 2.414 level. So if we look at the current cycle, we can see we are above this level now, around the 62,000 level, 63,000. So I think it's very possible we could have quite a run here coming up to this 2 level, which would be at 124,200. We might spend some time at this level like we did here previously and get a pullback. And then I think we will finish the bull run going from that 120,000 to the 268,000. So just some interesting confluence there between those two charts. And it's just a projection that I'm looking at, and obviously it's a hard thing to predict, and I'm not saying this is going to be right, but I just think it's an interesting projection, and it'll be interesting to see how it does play out and how close we get with this prediction. And one last thing, I did find this old chart here. This was in a YouTube video. I can leave the link below. And we can see that someone made this chart around 2014. It's just showing a logarithmic regression with this red line. And they did have some price predictions here. So it did predict a $1,000 Bitcoin in April of 2015. And then a $10,000 Bitcoin here in the end of November in 2017, which is extremely close to what it was, because we did peak out at 20,000 approximately in December of 2017. We can see here it's predicting a $100,000 Bitcoin on the 16th of July of this year. So it will be interesting also to see how accurate this day is here. So thanks for watching. I hope you enjoyed that. It was a bit of a different video. And I will be doing a Bitcoin TA video soon, as we have had lots of price movements. So let's see how that prediction plays out and how this video works out in the future. Thanks for watching. I'm Bitcoin Mamo. See you next time. Bye.